Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Friday, September 25th, 2020. And here are our top stories. Fintech firms rise during the pandemic, and big firms announce big changes for climate change. Well, joining me now to discuss this and more, Devin Banerjee is Senior Financial Services Editor for LinkedIn. He's also the editor of the This Week in Finance newsletter, which of course you can find on the LinkedIn platform. Devin, welcome back to the program. Great to see you again.
Thanks a lot, Jeff. It's good to be back.
Absolutely. And you know, even while you were away and not on the show, lots going on the platform, I'm sure. And I know you wanted to talk about LinkedIn's top startups. A lot going on in the fintech world.
That's right, Jeff. This is an annual list that we reveal where people want to work in the startup ecosystem every year. And one of the big trends on our list this year, it's a list of 50 startups in the United States, is fintech really dominating the top of the list. Our number one startup this year, and this is based heavily on our data, where people want to work, where jobs are growing the fastest. Our number one startup was digital mortgage lender Better.com. Also high up on the list was Robinhood, of course, which you and I have talked about quite a bit over time. Number 7 last year on our list, now number 3 this year. Brex, the corporate credit card provider, has also been in the top 15 the past few years. But let me home in a bit on Better.com, which I profiled in a story, by the way, if folks would like to read that under my profile. But really, you know, digital mortgage lending really being driven by a couple trends over the past 6 months in particular. Number one, mortgage rates. You know, over the past 6 months, we've seen actually 10 new record lows set among mortgage rates. Right now, the average 30-year fixed is below 3% for the first time. This is really being led by the Federal Reserve, Jeff, which back in March lowered its benchmark rate to that near zero bound. Of course, the central bank doesn't set mortgage rates, but when it makes a cut like that, it leads lenders to reduce the cost of consumer borrowing for things like mortgages. Another big trend driving this is working from home. We're doing it. A significant portion of Americans are reporting working from home right now. And many of them are thinking about, how do I get more space? Where can I move while working remotely? Or perhaps my company is going remote indefinitely. Where can I move for more space? So a lot of people spending their days, you know, daydreaming on Zillow or Redfin, thinking about homes to buy. And then the third thing I'd mention is there was actually already pent-up demand before the pandemic hit. The housing market has actually been strong even before the pandemic hit, and in large part driven by this huge, massive millennial generation that is aging now into home ownership. And then just going back to the fintech trend overall on our list, I mean, look, powering fintech the past few years have been a couple things, most notably with consumer fintechs like Better.com and Robinhood, those going direct to consumers rather than the more B2B fintechs. Low cost, you know, people want their delivery of financial services at lower cost. They want it more accessible, you know, they want it on their phone or on their computer. And they want ease of use. They want a good, trustworthy user experience like these apps and these websites that are being created. So actually just since our list was unveiled 2 or 3 days ago, Jeff, since then, Robinhood, as a matter of fact, has announced that it's raised an additional $460 million. That brings its valuation to about $11.7 billion, up 54% from 12 months ago when we featured it on our list. I'd also just mention on that fintech trend, Jeff, our data is also showing that across the LinkedIn platform. My colleagues over at LinkedIn Talent Insights sent me over this data, which is that in the past 5 years, the profiles on LinkedIn highlighting fintech-related skills, the number of those profiles has grown 1,100%, or a 12-fold increase in the past 5 years. So not only is consumer interest increasing in the fintech ecosystem, but the talent base is increasing. Our data also shows that content searches, content creation around fintech topics, conversation about fintech is also growing at that same rapid rate.
Look, I think a lot of this it was already accelerating. Now it's super accelerating, obviously because of the need for contactless payments. We're all working remotely, as you said. I'm not going to rehash that. Devin, I wonder what this means for cryptocurrency and digital currency. You know, I'm talking with your former colleague, Kevin Kelly, on Monday. We're going to be getting an update on cryptocurrency, but you know, that seems to have become more mainstream. And so it looks like payments and anything to revamp the the transactional efforts of financial services industry, that has really taken off.
That's true. I would say it's taken off in the past couple of years, but I think the growth has stalled out a bit. And I say that only based on our data. So 2 years ago on our top startups list in 2018, I had profiled a rise of several crypto-related startups on our list at that time. Companies like Gemini, Coinbase, even Robinhood's cryptocurrency plans. And in fact, over the past 2 to 3 years, those companies have all dropped off of our list, just in terms of the growth trajectory they were on. Robinhood, in addition, also kind of pulled the plug on its crypto division for now. So yes, I would say adoption and interest have grown in recent years, and I'm sure Kevin can point to the data on that. But I think the growth trajectory, just based on at least our data, where people want to work, and the growth in jobs at those companies, has stalled out a bit.
And when you talk about Robinhood, I mean, you said they were number 7 last year. They're number 3 this year. They just got another round of funding, or getting another round of funding. Every time I read, I put together my newsletter every morning, I see a Robinhood story. It just seems like they have really captured this momentum for people to save. And I don't know if that's a function of being from home, working at home, you're not out drinking coffee or being with friends, and so you have more time, so you play on your phone. I don't know. What do you make of all that?
I think a lot of those things are correct, and everyone has different motivations for trying it out. But I would say the ease of use, the accessibility, the low cost or zero commission element to it, which has really driven changes across the industry, as you and I have spoken about, have really driven people toward that platform. And also just these past 6 months, we've seen this globally, even though Robinhood only operates in the US. But in terms of retail trading and retail investors opening brokerage accounts, we've seen this data globally that number is rising quite a bit year over year across the globe. So it's really these lockdowns, these shutdowns, being at home, seeing the volatility in the market, seeing the very dramatic recovery in equities that have occurred since that March plummet. I think a lot of people have FOMO, fear of missing out, and then that combined with the low cost, low barrier of entry, ease of use on these apps, I think that has driven a lot of the growth in that space.
But when you mention FOMO, Devin, I think of the late 90s and that tech bubble, so hopefully we're not at that same level of FOMO. Well, we're going to go to a quick break. Lots going on the LinkedIn platform. We'll talk to Devin more when we come back. We're going to hit big firms now making some big pledges around climate change. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. and we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Devin Banerjee. He's Senior Financial Services Editor for LinkedIn. Devin, thanks for staying with us this morning.
Absolutely, Jeff. Happy to.
Let's shift gears and go from fintech startups and the popularity there to Climate Week and Climate Change Week. That's a big theme this year, and rightfully so, because the trend for sustainability and environmentally sound principles really has just taken off. But some big companies are making some big pledges. What can you tell us, Devin?
Absolutely, Jeff. It's now a week every year coinciding with the UN General Assembly called Climate Week. And it's become a time when big companies, even some states and municipalities, come out with new or updated plans and pledges for their part in combating climate change. So I'm going to go through a couple of the real headline companies and highlight names that have made some interesting pledges, and then we'll get into kind of the more skeptics' take on these pledges. But let me start with General Electric actually rolling out a pledge, even as its stock is falling because of this announcement, but rolling out a pledge to stop building coal-fired power plants. This is quite a seismic shift. And again, the horizon of these is over time, so these aren't immediate actions they're taking, but at least pledges. Morgan Stanley in the financial services space has vowed to cut the emissions from its clients and the projects that it finances to net zero within 30 years. I actually have a friend on the infrastructure financing team at Morgan Stanley who was confirming to me that this is quite a serious announcement coming from that group within the company this week. This morning, and full disclosure, we're recording this on Thursday of this week, but this morning on LinkedIn, State Street CEO Ron O'Hanley on LinkedIn said State Street, the big asset management giant, has achieved carbon emission neutrality this year, and it's committed to reducing that absolute basis of carbon emissions over the next 10 years. I won't go through the others. There are a lot of announcements out this week: General Mills, Amazon, Walmart, and more. Really headlining a lot of those pledges. Now, I mentioned we would go into the skeptics' take a bit. I mean, look, it's one thing to set these goals, to make these pledges. It's a whole other thing to actually achieve them. Even though these companies are starting to take the steps toward that, many of these are aspirational in nature. So, for example, Kraft Heinz this year said it will not meet the targets, the environmental goals it had set for itself for 2020. This year, due to many of the challenges of the COVID-19 pandemic, but also just trying to decarbonize a global supply chain is a bit more difficult than it anticipated. Walmart, even in rolling out the announcement this week, acknowledged that many of its plans hinge on innovations not yet developed or not yet fully developed. For example, Walmart's plans rely on electrifying all of its vehicles, even its large trucks, which is a technology that, right now, candidly, is quite expensive and not yet fully developed. Even the plans from the big oil giants, Chevron, Exxon, those plans rely on quite nascent technology around, carbon capture, carbon storage, that, again, are extremely expensive and ironically quite energy intensive. So again, a lot of challenges, a lot of roadblocks between now and those dates that these companies have set when they want these pledges to be achieved. But in terms of those pledges, the number of net zero pledges have doubled just in the past 12 months. That's according to the United Nations. And there's a lot more energy as well in Washington, D.C., of course, in the policy arena, because federal investment and policy incentives from the government are also quite crucial here as well. So there's a whole kind of lobbying business that has cropped up in the past 3 to 5 years around this. And so that may be a positive sign for those who are hoping this future comes.
Well, I think that it's more than a trend. I mean, you can look around the globe and you see that ESG, sustainability, however you want to frame it, is a big topic. Inside retirement plans, outside retirement plans, people are thinking about this. They want to have a positive impact. I just always go back to, I think you bring up some good points about some skepticism. You know, I mean, people always say things. The question is whether you can actually implement it and do it over time. And look, plans change year to year. That's why you have long-term plans. But I'm wondering, Devin, if there's been any developments, for example, in some of the data and measurement, right? Because how do you say, I mean, I think you made some good, you talked about one of the firms kind of significantly becoming carbon neutral, but how do you measure that? I mean, I'm not an engineer by any stretch of the imagination. My wife will tell you that. But I mean, how do you measure something like that in order to quantify it?
Yeah, well, I think 2 points here are really interesting. For the first, to answer your question, a lot of these companies are putting out specific measurements themselves that they will want to meet. So, for example, Ron O'Hanley at State Street, I mentioned, published that LinkedIn article this morning, Thursday morning. If you take a look, he lays out exactly what they'll be measuring in terms of that absolute reduction in carbon emissions across State Street. But I think what's interesting, the second point, is related to the investors who are interested in this. Like you mentioned, retirement plans. You and I have talked about these big asset owners, pools of capital around the world that are very interested in ESG and sustainability, like pension plans, sovereign wealth funds, some family offices. And their concern is exactly what you're talking about, which is when they're doing investment due diligence and research, how do you compare different investment opportunities and how do you compare their sustainability goals and metrics? Because there hasn't been alignment or agreement on what specific metrics can and should be used. There are some impact investing organizations, one called the GIIN, G-I-I-N, I think it's Global Impact Investing or Investment Network, who the founder of which I've interviewed in the past. And I know there's been some effort among them and their peers to standardize the metrics and the attributes for companies that are issuing equity and issuing debt, so that investors can analyze their sustainability and impact metrics. But there still is not agreement across the investment management universe on what those metrics should be.
Yeah, and I'm not saying that anyone's doing anything nefarious. I think what I'm saying is that, like the private equity and hedge fund industry, private markets, you need standards, and like with any asset class, you need standards in which to benchmark, and that's an important part of any due diligence process. So I guess we'll see how that evolves. It's brand new, just like crypto and some other asset classes, and like some of the existing asset classes that have evolved over time, this will evolve as well. Devin, always a pleasure chatting with you. Thanks so much for joining us on the program this morning, and we look forward to catching up with you again very soon.
Sounds good, Jeff. Take care.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out today's edition of our newsletter, The Morning Pulse. We're back again tomorrow with our weekly show. We've got a very special guest, and then we'll take a look back at our best segments for the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.